What is going on, ladies and gentlemen? Day number 3 of our amazing boot camp. Hope you guys have been enjoying the first 2 days. There's been a lot of value, especially as a beginner. You know, there's a lot of game in those 2 videos that can just get you going and get you practicing, right? A lot of times when it comes to trading, it's all about the exploration as well. It's all about, okay, how can I find myself within this? How can I utilize this trading space to add value to my life? Once again, I said it in video number 1. Maybe your purpose of trading is not just to make money, it's to help others, right? That could be your purpose. It could be, I'm trying to help my family, I'm trying to help out, anything. Remember, number one thing that you cannot fail to understand is that you have to make this trading thing bigger than the money, so then the money can fill your purpose, right? If you lead this business with your purpose, then the money will follow. The money will guide you and continue you to act on your purpose. You know, one thing that I learned was the reason why people don't go after their dreams is not because they don't have the desire. It's not because they don't want to go after their dreams. It's simply because people don't have the financial means to get back up after they fail. Think about all the people that have amazing dreams in life. Oh, I want to go to this school. I want to go to this school. I want to go to this school. What? But guess what? They don't have the money for tutoring to help their kid get to the school. They don't have the money to go to a networking event so they can go ahead and meet people at these high-level institutions to help their kids get to school. Their kid wants to be in the NBA, but yet AAU and Pro League and Youth League basketballs, right? Those kind of things, people don't have the ability to do. Why? Because they don't have the money to actually act upon it, right? So with trading, which is really, really good, I want you guys to understand, and I got this, got to be my phone real quick, right? So with that being said, you want to think about how are you going to be utilizing trading to get your thing up, right? So day 1, we talked about how to set up your brokerage account, how to get things going. Number 2, we talked about the beginning of trading view a little bit, you know, marking up higher highs and higher lows and recognizing trends. And now today we're going to talk about support and resistance and trend lines, right? Because in most strategies that you're going to see on the internet or you're going to be practicing pretty much does utilize support and resistance. Every basic trader, every advanced trader always understands the concept of support and resistance. So before we get on the chart, let me go ahead and explain what support and resistance really is. So I have my notebook right here, and I want to use this as a base, okay? So imagine, you know, you're standing on a floor, right? You know, when you guys are walking into buildings or you have any basic level of engineering, you always understand that the tallest buildings, for things to be built up taller, they have to have a strong foundation to be able to build upwards. Those are called support. You ever think about, you know, if you guys are watching the Olympics, right? You're watching Simone Biles. She was on a balance beam, right? Those balance beams were supporting her weight. See how she was standing on top of the balance beam. That balance beam acted as a level of support for her when she was going out on the floor routine and she was doing all those flips, right? The floor became a level of support so that the more that she put pressure on that floor, she was to bounce higher, right? So in the same thing in trading, what you're going to be looking for is in the market, there are going to be moments where the market or price, like I described in video number 1, or the candlesticks in video number 2, those things will come to a level or a price point that's supportive to everyone, right? For example, let's say, for example, you're in a room and you're with 10 people, right? You guys are all trying to go to the club. You don't know what club you're going to go to. You don't know what party you're going to go to, but you go around the room and let's say 8 out of the 10 people all want to go to X club, right? There is a consensus that we all agree that we are going to go to X club. When it comes to the market, ladies and gentlemen, the buyers and the sellers and the big banks and the institutions and the trillionaires of the world, they have to agree on price when it comes to trading, whether it's a stock, a crypto, a forex, a future, an entity. They have to come to a price point that's supportive to everyone, hence the word support, a level, a floor, something where the market is going to come and bounce off of the floor, just like a bouncy ball, right? So that's what support is. Now, resistance is the same thing. So if anybody's an athlete watching these videos, you know how you go to the gym or anybody who works out. Imagine you go into the gym, right? And let's say you're doing squats, right? Everybody squats and you're warming up, right? You squat 135 with the bar. You're like, okay, that is a good warm up. And you keep increasing your weight until you hit a ceiling that you cannot break, right? It may be a weight that's too heavy for you or just enough to where you are pushing your ceiling of your physical abilities, right? So now you're facing that resistance. You ever went outside and it's super windy outside and all that wind is pushing on you? That's wind resistance, right? That's wind pushing on you and you're trying to walk forward against the wind. You're facing that resistance. You're facing that pressure from one angle and you're trying to go the other way. So see how I'm demonstrating this? The wind is coming you at like this and you're moving across like this, right? Just like how you're walking. Wind's coming here, you're going this way. Resistance in trading, if you took my hands and rotated it just like this, the market will try to go up to a ceiling and fails to break that ceiling. Ladies and gentlemen, that's called resistance. When the market is pushing upwards to a level that they cannot break. Or in other words, another way that resistance is created is where, let's say, for example, I have a crypto ledger here, right? So let's say these ledgers go for sale for $100 and I'm the company and I go, you know what? So many people are buying this ledger at $100. I'm going to go to my board members, all of my board members, my stock owners, my voters in the company. And I said, you know what? We're going to push the price for the sale of these ledgers up to $105. Let's see if people keep buying it. They raise the price up. Oh, look, more people are buying it at 105. They raise it again to 110. More people are buying it. They raise it to 120. Not as many people are buying it, but a few of us are still buying it. Then they jump it to 150. And now no one's buying the product. The company themselves have faced a level of resistance for the price point of this item, the ledger. That's how resistance, if you look at it, if you think about it that way, it's the same way in trading on a chart. Remember what I told you guys, the candlesticks are just visual representations of price manipulation. That means people, yes, us, me and you, who have a lot of money, are generating price in a direction. And when it gets to a point that it's too expensive, then they face a level of resistance and you're going to see price drop. So it's the same way with the value of a company. It's the same way with the foreign exchange market. It's the same way with options. It's the same way with futures. Everybody who is controlling these markets are having conversations behind the scenes of, okay, where do we want price to go? Where do we want this thing to go? Okay, how can we go this? How are the consumers reacting? They're always making these decisions and you're watching these decisions happen on a chart in the form of a candlestick. So when I go ahead and pull up my chart here, and we're going to pull up TradingView today, we are going to talk about gold. We're going to utilize gold as a great example of resistance and what happens to price when it hits a ceiling. So we're going to talk about what happens when price hits a high point and when price hits a low point. How can we recognize levels of support and resistance? So let's go ahead and get this thing loaded up here, and we're going to go ahead and dive into this lock-in. Let's see here. Let's see. Right now. Awesome. Excellent. So let's get into it. So let's go back to how can we practice identifying support and resistance, right? Remember, you guys, we're practicing here. We're practicing here, okay? So a good way to practice identifying support and resistance. And it's not about being always accurate all the time. You just remember, you just have to train your eyes to see, and you'll get better with time. It's just like shooting a basketball. The more that you practice shooting a basketball with correct form, the easier it becomes second nature to you. So a good way for you to practice identifying support and resistance at a basic level is just practice on a line chart, right? And remember those tools I marked down here for you? So for you to know that you found an area of resistance or an area of support, it needs to touch that level 2 times, right? It needs to touch that level 2 times to really confirm that it's an area of support and resistance. If it hits 1 time and then rejects, meaning it hits the level of support and bounces off, you found support. Is that support good? That's another question. But at least the market has identified to you a level of support and resistance. Now, is it confirmed? You might need a second or third touch. It's kind of like, when you were a little kid and you wanted to sleep over at your friend's house and you asked your dad and your dad said no, and then you needed extra confirmation of that no when you're little. And what did you go do? You asked your mom, or you asked your mom and she said, no, she said, I'm cool with it, baby, but you need to ask your father. Then you go ask your dad, hey, dad, can I go ahead and sleep over at Billy's house? And then when your dad said yes, you got your confirmations. Just like you when you're a kid and you were asking your parents if you can stay over at a friend's house and you needed 2 confirmations to be sure that you can go to your friend's house. Think about trading in that same aspect. The market itself, you need, even though that one time it can reject, that doesn't 1,000% confirm that this is a good area of resistance that might hold. You might need 2 touches, 3 touches, 4 touches to identify that this is a key level of the support and resistance. And the more a level, now check this out. I'll show you something really interesting, but let's just practice just marking them up real quick. So the line chart is really, really good for you guys just to find these high points. So if you guys can walk around and find these, like I would say spikes, right? Find these sharp spikes in the market. Take your horizontal line or horizontal ray. Let's do a horizontal line, right? Let's go to a horizontal line for a second. Let's pick this spike right here for this example's sake. For example's sake, let's just pick this spike and we're going to drop a horizontal line right at the tip of that point. For example, okay? Now, something that you can do in your trading practice as you're getting better with recognizing levels, support and resistance, because today we're going to talk about when to buy and sell, right? We're going to talk about that as well, because I don't want people to continue to fall into cliche of, oh, you just buy high, buy low, sell high. Yes, that is conceptually true, but we're traders. We're actually trying to execute the higher probable setups. So it's deeper than just buy low and sell high, because we need to understand where a low actually is and where a high actually is. And so practicing and training your eyes to recognize levels of support and resistance is going to help you do that. So let's say we drop this horizontal line on the chart. And a good way for you to see if this is a good level of support and resistance is, like I just been saying this entire time, support and resistance. Sometimes in the market, a level that was once support can become another point's resistance. Or at some point, an area of resistance can become support. And I'll prove this with this example here. So we're going to take our circle tool that we utilized from the last training. I'm going to favorite this here. I love the circle a little bit more than the ellipse. So let's take the circle and let's just look at the market in the past, right? When you guys are trading, you don't know the future. But a good way for you to recognize patterns, because the market is repetitive. It moves in rhythms. It moves in patterns. Just like in music, just like in your day-to-day life. You have a morning routine, you have a night routine, you have a routine when you're going out, you have a makeup routine. Just like the market moves in routine, it moves in patterns, it moves in habits. So with that being said, if you find an area that you think is a good support and resistance, test that theory and see if it once was support and if was once resistance. So for this horizontal line example, let's take our circle tool and let's just mark any point at which the market came to this line and reacted. Something like this, right? We can keep going to the left. Let's see if it happened here in the past. Oh, what a coincidence. Prices have been here before in the past, right? It's just like, red flags and green flags, right? Oh, that's a red flag. But in trading, we're only looking for green flags, ladies and gentlemen. We're looking for green flags up and down. So let's look at there. Oh, we got some more green flags. We found some more levels. Here's one here. Here's one here, right? So, but notice how as you go back in the past and you look at this specific price point on gold, for example, you notice how the market will, in the line chart, will come up to this level of this line and reject downward. That's resistance, like it hit the ceiling and rejected. Or it will come up to a level, it will break through it, and then come back down to test that level, right? This is called a break and retest. Why is that important in the world of trading? Well, when you guys are dealing with support and resistance, you don't have a way to test if this level is good or not. The market will show you if the level is good or not. You don't have to do any guesswork. Let the market tell you if this is a good level or not. So a good way for you in your mind and in your eyes to go, okay, is this a true level of support and resistance? Anytime you see a level of resistance that's being broken through, right? It means it came to a high point and kept going. For you to know if it's really an area of resistance, the market is going to want to test that level. It's going to want to test it. So if you have a previous area of resistance, and I'm going to show it with my hands just because it's a little bit easier, right? I'll take my binder right here. This is a great way to do this. So let's say I got my binder and this is the market, okay? So imagine the market, I'll do it in my camera so you guys have a little bit of depth perception. Check this out. The market is moving upward like this and it hits a level of resistance and then it drops. But then all of a sudden you see the market come up and break the plane of resistance, right? You guys see how it's coming up and then it broke through it. Now for you to confirm if this is really going to be a good area of resistance, when it breaks through, will the market come back down and test it? And what I mean by test is this. If the market breaks through this line and it continues and then it tests and then bounces and continues, you now found yourself a good area of support and resistance. But if the market comes to this level, breaks through it, reverses on you, and then breaks right back down, you don't have an area of support technically. You only have an area of resistance, right? Because the market broke through it, came back to this level, and didn't stop. It kept going back down. So you now know, okay, this is not an area of support. It's now become an area of resistance. And so why am I teaching this now is because when we talk about identifying when to buy and sell in the market, support and resistance is going to be your friend, but you need to be able to accurately identify, is this true resistance or is this really a true level of support? Okay, so let's go on the chart and let's look at gold again. So why would this horizontal line that I drew a good area of support and resistance? Because you guys will see on the line chart, market came up to this level, rejected, and then you can see that the market broke through. Let me get my arrow too so you guys can like kind of like follow along. You see how the market came through here, it tested, it rejected it, then it broke through it, and then watch what happened here. It fell back down and tested this level, and then rejected and continued up. Ladies and gentlemen, that's what we call a break and retest. Now watch what happens if I go back to my candlesticks. You'll see it in real time. Just like that. Pay attention to what I just did. We were just on the line chart and we marked a horizontal line just off the line chart. Look at the accuracy of our line, not only just with the line chart, but now you can see a real representation of this happening with the candlesticks. Green candlesticks came up to this level of resistance, rejected just like this right here. Then you see price break through and you see all continued. But notice how if we want to confirm that this is truly a level of support or resistance now, if resistance is broken, this area becomes now new support. We want to see if this is truly resistance or is this going to become a new area of support. Notice how the market came back, it went up, came back down to this level, and then I'll zoom in on here. You guys can see this candlestick rejection. Now notice in here, you see how the market broke through this level of resistance, came up, came back down, and tested this level, okay? Once it tested this level here, you see how the market bounced just like the bouncy ball or just like that floor of support and bounced off of it. And remember, this is gold. Even this move right here was 200 pips, right? That's a lot of movement in the market. Imagine you guys are able to find this in the stock market or in the cryptocurrency market or in the futures market. You guys can find opportunities just like this all over the place. It happens everywhere. So it's not just conducive to one style of trading. This happens all over the place. But if you guys can practice that and get better at it and better identifying, then you don't have to catch yourself in a position where you can get faked out. And we'll talk about that another day. But with that being said, notice here, right? You had this price, even when price came back down below this level, it came right back up to it again, broke through it, tried to retest the level. Price came and retested this level and bounced off again. This move still was another 70 pips. Then, of course, you see price break below the zone and sell. But with that being said, this level was a good area of support resistance that you can look at to possibly execute your trades from a basic standpoint. Of course, people out there on the internet are going to be like, oh, that's not that simple. It's not that easy. But just for the sake of practice, this is just training your eyes to see, right? You just got to train your eyes to see what you're looking for. Then, of course, when you add your strategy and you get a little bit fancier and you start wanting to snipe entries, then you can do all the fancy stuff a little bit later. But as what I did as a beginning trader, I just practiced training my eyes to look for certain things. All right. So then when I got better at it and I see something's happening, now my next step is not, I don't have to worry about identifying anymore. I just have to worry about executing at the right time. And we'll talk about that on tomorrow. We'll talk about that on Thursday when I go over my strategy that utilized me to be profitable. But that right there, this is just the practice. And on Wednesday, we'll get really in depth into that. But for today, this is all about just identifying support and resistance and training your eyes to find those levels. So notice here again, right? You had this area come into the zone and it broke off and it fell. So another thing about support and resistance, guys, and I want you guys to understand, it's not just a line that you place on a chart. It's a zone. So remember, think about this, for example. Let's do a great way of me explaining that. NFL season is coming up, right? Everybody's watching football. Everybody's watching the Cowboys lose. That's a joke. Just playing. Not everybody's watching the Cowboys lose. But everybody's watching the game, right? And what is the location where a player scores points? It's called the end zone. It's called the end zone. And even the end zone in the NFL is 10 yards big. It's not just a line. Yes, when you dive for the ball, you have to break the plane. But guess what? You can break the plane and score a touchdown. You can be in the back corner and score the same points, whether at the front of the end zone or the back of the end zone or anywhere in between. It's still worth 6 points at the end of the day. So trading is similar like that. It's not just a line that when you're identifying support and resistance sometimes. It's a zone, right? When you can look at a cluster of candlesticks in an area of consolidation, right? An area of consolidation could also be an area of support and resistance, right? Because the market may be indecisive in that range. So maybe sometimes when you guys are looking at a chart, you might be like, oh my God, Aaron, well, I've been practicing with my horizontal lines, and sometimes the market is not 100% accurate to the line that you drew. That's correct. So maybe you need to be able to know that this is a zone. This is an area of interest. This is an area where I need to look for possible opportunities. So it may not just be a perfect line every time. Proof of the pudding right here, right? On the line chart, it looked like just a bunch of lines. But then when you go to the candlestick, you guys can notice that these areas of support and resistance a lot of times can just be a cluster zone of, oops, my fault. Here we go. Here we go. Where's my microphone? Oh, sorry, y'all. Microphone disconnected. Got a little bit too excited. A little bit too excited there. But anyway, like I was saying, right? So sometimes areas of support and resistance is not just a line, because the market's not going to follow your lines. It's going to follow its lines. It's going to follow what everybody else agreed upon in the background. All the rich friends talking, they gossip. Oh, what they're talking. So they're coming to agreements with that versus the buyers and the sellers. So sometimes it might just be a cluster of candlesticks, can be an area of support resistance, right? And even here, like I said, you had an area of resistance, and then you have a strong rejection. And then as you guys can see, look what happens, right? Look what happened right here. Resistance, and it sold, it came up, and then you guys saw what? You saw the buy. It broke through that level. And the ICC market completely took off. It completely took off. So now, what do you think you can safely assume? Now you're in mind, you can go, oh, this was an area of resistance at one point. What if the market decides to come back down to this level and find support? So Do you practice this over and over and over again and just practice looking at this stuff, you can get sharper and sharper and sharper of identifying levels. Here's another great example, and I will show you guys more in a zone ideal. That was just a line because we're on a line chart. Now let's take it up a notch. Let's take it up a notch. Sometimes your zone can be an entire candlestick. Now hear me out. Hear me out. Hear what I just said. It sometimes can be the size of a candlestick. Okay? It can be the size of a candlestick. So now check this out. Let's look directly at, for example, this red candlestick right here. Now, most of us, like I said in the beginning, you might mark off this high point, like on the candlestick, right? You remember the high, close, body, open. The song from yesterday. High, close, body, open. That's for the bearish candlestick, right? Or for the bullish candlesticks. High, close, body, open, right? You have the song in your head, right? I'm going to get it stuck in your head. Watch, it's going to make sense. You might mark off this zone right here. Let's say we're on a line chart. You might mark off that little bit ledge. That's fine, whatever, fine. Let's say you mark that off and you're like, I want to test if this is actually a level of support resistance. Let's go to a candlestick chart. Okay, you can see that you pretty much were accurate, but now let's take it to a next step. You want to find a candlestick, roughly about 10 to 15 pips big, that's at a level of support resistance and highlight it. Highlight that candlestick. We're going to change this because I know we're using candlesticks just like this. So let's make the opacity a little bit lower and let's make this a little bit see-through so you guys can still see. And then we'll make this black. Let's make it black, for example, right? Let's make it black. So now you find yourself, I might draw this zone by the size of the candlestick, the body of the candlestick. Or if you really wanted to, you can go wick to wick, however you prefer. As you are practicing, you might find a preference. You might want to draw the entire candlestick. You might want to draw the body of it. But when you guys get into a strategy, of course, it always just depends on who you are. So then what I'm going to do is I'm going to go ahead and drag this zone, this candlestick over to the right because I need to see into the future of where price could be. You go to the past to find an answer, and then you move to the future to predict where things are going to go. Okay? That's why the people say you learn from your history so you don't repeat it. In trading, you learn your history so you can repeat it. Right? So, like in history class, they're like, we learn about history so we don't repeat it. Well, in trading, we learn about the past so we can repeat it, right? So we want to be able to be accurate. So we take this zone. Let's see if I can scroll out my chart a little bit here. Let's go ahead and delete. So now I found this zone, for example. I'm going to go ahead and drag it out. Let's delete the line. Let's delete the line. I'm just going to drag this zone over. We're just going to keep dragging and keep dragging. And you're going to notice something. Oh my gosh. You see that the market came to this level of previous resistance and became new support. So I'm going to see if I can do it like this for you guys. Label some things so just for the sake of practice. This right here, right? This was once resistance. But now, fast forward, this area became a level of support. See if I can draw a new text box here. Right. So that's what it looked like. You guys can see it right here. Market came up to this level of a resistance zone and rejected and continued. And then the market took its time, but then it came back to this level again of support. And now watch what happened. As the market came to this level of support, you guys can see that the market bought off and kept buying. Once again, this move was 200 pips. That's still a lot of movement. And then watch even again, even when it came to this level of resistance, guess what it did again? It came right back down to that same level. Bought off again and continued on. And now you can kind of drag this level. And that might be an area where you might want price to come back to if it starts selling. So you guys these are these tactics where you can go, okay, what if I can do this on gold? What if I can do this with crypto? What if I can do this with a future? What if I can do this with a stock? So now when you're practicing this, okay, I found an area of support. Let me go ahead and get my call options going. Okay, I found an area of resistance. Let me go ahead and start calling my put options now. If you're for all my stock option traders, right, out there watching this call. But for my, my forex traders and stock traders, this is it, right? Resistance became support again, and took off. So now I might drag that zone over. For example, let's say you're looking at more in recent price, for example. Another great example. This is another great example right here, right? Let's go to the line chart. Let's mark off these peaks. I'm going to see this peak right here. We'll mark off this peak, for example. Let's go back to our candlestick. The line's pretty accurate, but we want to be a little bit more sharper. Remember, like I said, support and resistance doesn't have to be a line. It can be a zone. It can be an area, just like the end zone in football. It can be a zone. It can be like the soccer goal. It don't matter where the ball goes in the soccer goal. No matter where it goes in, you score. So give yourself a range. You might need to give yourself an area of interest, as like some of us like to call it, an area of interest. Or, so I'm going to pick this candlestick right here. We're going to pick this candlestick right here to be our example. Okay. So let's take our rectangle tool. We'll zoom in on it. And we'll go ahead and take our rectangle. We'll draw it. We'll just draw the body of it. The wicks are pretty large, but for example, we'll just draw the body of it. For example, we'll go body to body, just like that. Or like I said, depending on how you want to practice, depending on how you want to get better at it, you might do it from wick to wick and then just go ahead and extend it across. But for this example, I'm going to be doing a little bit more body to body on this one, just because that's just my preference. Tomorrow, when we talk about fake outs and stuff like that in the market, we'll definitely talk about wicks and how they play a role, because those are very, very important when it comes to, support and resistance. All right. So we got that zone drawn. Now let's go ahead and delete that red line. So we know that this was an area of resistance because we saw a red candlestick reject off of it. So let's just say this is area of resistance, right? And so now check this out. We can drag this across and now it becomes an area of interest, right? It becomes an area of interest. So now we can extend this across. And so guess what? As you as a beginner trader, you're like, man, I don't know what it's going to be. I don't know where it's going, if it's going to go up, or if it's going to go down. I don't know what to do. So now you can say to yourself, you know what, Aaron, let the market come to me. Let me let the market come to my level. Let the market come to me. So let me get in position by practicing market support and resistance. And if we know, once again, if we know that this area was once a level of resistance and price broke out of this area and continue buying, what do you think the market might want to do? Come back here. It may want to test if this level is going to become an area of support. And the reason why I say that is because two things are going to happen. And this is your confirmation. And now, like I said, it becomes an area of interest, but now you might give you an idea of, okay, which way you want to go, which way you want to do, or how do you get yourself a better probable setup. Is just for the beginner. Of course, there's strategies that go a little bit fancier than this, but just for the sake of beginning and just practicing, training your eyes, let the market do a couple things for you. Will the market come to this level and bounce off? Now you know that's an area of support. Or will the market come down to this level, break through this zone, retest, and if it holds, meaning it doesn't continue going upward, and then starts selling, you've now successfully identified an area of support here or a level of resistance here, just like it did here, just like it did here, etc. Now, I'm going to blow your mind. Remember the time frame thing we talked about on day number 2, where we talked about the candlesticks are just a representation of price manipulation over a period of time. It's a period of time. I'm going to give you guys some game here. We're on the 1 hour time frame, okay? On a 1 hour time frame. Excuse me. That's some Chipotle, and that was so good. That was just so good. So, with that being said, I think my homie's starting a live trading call right now. So let me go ahead and send this out to the gang, send it out to my students. Let's go ahead and send this out. Make sure people can go ahead. So with that being said, now you could go like, okay, it's a 1 hour candlestick. Remember, it's 1 hour. There's 60 minutes in an hour, right? There's 61 minute candles in an hour. There can be 4 15-minute candles per hour. Because as you guys are dropping time frames, notice I'm going to show you, watch what happens to the chart. We'll keep the markup the same, but watch what happens to my markups a little bit. They stay the same, but now you can get an idea of, oh, there was some more activity at these levels. So think about this. 1 hour time frame, you probably only got 4 candlesticks in this cluster, meaning this is 4 hours. 1, 2, 3, 4, or 1, 2, 3. That's 3 hours of price not really doing anything. Then when you go to the 30-minute candle, you guys can notice that same circle, you found almost 8 candlesticks in here, not really bouncing around, undecided. You can go in over here and see undecided. You guys can see it's getting even more detailed. You guys see these wicks? Look at price. There's a wick that rejected it. There's a wick that rejected it. There's another wick. There's a candlestick that broke through. Another wick. Another candle. So now you're like, okay, there's a lot of activity when price goes into this range. When price goes to this range, there's a lot of activity. Even if you go down to the lower time frames, you can find a lot more activity in these ranges. All right. You find now even in more detail. Check this out. Remember we talked about break and retest? Now we're on the 15-minute candle time frame. Notice what the market did. It broke, retested, bought, retested again. Was it really an area of resistance? Is it really support? It touched it twice, 1 time, 2 times. Confirmation. It broke it once and tested it. That's 1 test. It went back and asked its mama, hey, are we ready to buy yet? Hey, are we ready to buy yet? Is this truly a level where we can buy? And what did the market say? Yep, it's time to ready to buy. And now those candlesticks as a reaction of that. Even when the market came back down again, you see this candlestick. Came down to this level, rejected, bought off again. You know, just on a lower time frame. You can see what the market did. Kind of, what did it do? Kind of went down to this level, played around a little bit. Then it broke out of it again. And then watch this. Notice this, not here. Good. Love him, love a YouTuber. Cool YouTuber. But now, check this out. Now see how the market, even in this candlestick here, it's a 15-minute candle. I bet you there's some candlesticks, little tiny 15-minute candlesticks in here, 1-minute candlesticks that came back to the zone and tested it again, right? This is called market structure, okay? When you're starting to recognize market structure, it's a combination of support and resistance levels mixed with higher highs and higher lows, just like on video number 2, where we talked about identifying trend. You identify the trend, which direction, then your second step is identifying support resistance so you understand the structure of the market. The market moves in different rhythms and patterns. Now you can figure out a structure. And so with that being said, this area can be an area of interest and see if the market does anything. All right. So when you guys are practicing a support resistance, you guys can see this all over the market, all over the market. Now, even in gold right now, for example, let's see what I think gold went to an all-time high, right? Gold went to an all-time high. So it's sometimes a little bit harder for maybe the average person or for somebody who's beginning to know, okay, is this truly the high? Is this really truly the high? So something that you guys can utilize, right? Drop that horizontal line or draw that zone. But now, let's say you're on the 1 hour time frame and you're like, I don't know if this is really a high or not. I just don't really know. So you guys can, it's a good thing. It's okay. Drop down lower time frames. Oh, look at that right there. Oh, we got ourselves some clusters, some candlesticks. We got something. So let's say, for example, this was the highest point. I go ahead and get my rectangle tool. I draw the body of the candle just like this and extend it across. Just another example of support and resistance acting out in a lower time frame. You guys see this ginormous wick. See what price did? It came to the high. It broke below. What did it needed to do? It needed to test it. It's going to test you. Just like in trading, sometimes you're going to get tested in trading. Sometimes you are going to get tested, and that is okay. You are going to get tested in this skill. It's okay. Just like the market will test itself. It will want to confirm to itself that this is truly a high level or this is truly a low level. It's going to test it. All right. So with that being said, you guys watch this. The candlestick can go up to this level, and then guess what it did? It rejected it and sold. It sold it. So, for the example of sake here, we got this cluster of candlesticks, and we got this candlestick right here. Let's go ahead and extend it across. Let's see the line chart real quick. See that right here? See these lines? Check it out. You can draw yourself a nice little horizontal line just like that. Go to your candlesticks. See how accurate you are. Oh, snap. You might be a little accurate. Maybe the 1 hour time frame doesn't really give you enough data. Drop down the time frame. Get you some data. Get you some more information. Get you some more stuff that can confirm to you what you're seeing is what's really happening. All right? You want to get that confirmation. Get those confirmations in order. So now, okay, all right, bet, cool. I got myself the zone here. I'm going to draw this candlestick across, do something like this. So now in real time, we'll delete the line. In real time, guess what you just gave yourself? You gave yourself 2 potential areas of where you think the market can go to, or maybe needs to test. All right. So for this example, right, we have this. If you guys remember from video number 1, we talked about higher highs and higher lows. Let's go to the line chart. Let's talk about buying and selling really quickly. What direction now? So now we've practiced identifying support and resistance. Now let's talk about, okay, what are we going to do now with buys and sells? Just like in the beginning of, in the video, I talked about where people will go, oh, you just only want to buy low and sell high. Yeah, that's like, yes, that is the case. But how do you really know if this is a high level? How do you really know if this is a sell level? Well, you want to see what the market is going to tell you. Right. So we've already got the confirmation on the 30-minute time frame that this area was once resistance, it broke through. All right. So now what could the market possibly do? What the market could possibly do, which I would like it to do, is I would like for the market to come back up to these levels. I would love the market to come to these levels and get tested. Will the market come up to this zone and drop? Or will the market come up to this zone and drop? Or will the market go up to these levels, break, retest, and continue? We don't know yet. We don't know yet. That's called bias. We might have a bias on how we look at the market, but it's always good to let the market tell you. You might have in your head, man, I really want this to sell. Man, I really want this to buy. You can really want anything. You can really want the market to do whatever you want, but is the market going to do whatever you want? No. Your job is to let the market do it, and then you just got to practice getting in position. So today, I was able to take an opportunity off this sell. It was great. It was excellent. But now I'm looking for, okay, what's my next play? What's my next opportunity? What can I look for? Let the market identify you opportunities. All right. So for this example, we got a couple areas here. Let's see if the market goes up to the zone and drops. Let's see if the market goes up to the zone and continues buying. So now you have an idea of, okay, how can you position yourself? Because ladies and gentlemen, as a beginner trader, one of the biggest lessons I can tell you is less is more. Less is more. In the beginning, yeah, you can get as many reps as possible. Just get in any trade you can. Just get used to getting in. Get used to getting in. That's perfectly fine. But now as you're going to start adding capital, you're going to start live trading, you're looking to get some profitability. Profitability is always directly correlated to projection, or to possibilities, right? You can only project what the market's really going to do, but your best place is position. So to give yourself the best opportunity to where you can see some kind of results. And on tomorrow, we'll talk about risk to reward and stuff like that. We're going to talk about risk to reward, really talk about buying and selling really in depth there. But just for the sake of example, hear me out. It's going to be better for you. And I love this term. It's better for you to start on the beach, not in the middle of the ocean. Imagine the beach being support and resistance. Those are stable areas. You know those are stable. The ocean is what? It waves, it moves a lot, it goes up and down, and it moves around. So you are better positioned to start on the beach rather than in the middle of the ocean. So imagine support resistance being your beach. Let the market come to your beach, and then you can be in position to take a trade. Because now profitability comes in when now you're in a position there where now I wouldn't say positioning. What's the word I'm looking for? I can't think of the word. It's gonna come to me. If you guys comment on it or whatever, I'm just thinking like, what could that word be? But anyway, probability. There we go. The probability of you getting in position on a better trade is going to be higher when you would execute a trade at areas of support and resistance. You're going to have a higher probability when you execute a trade at levels of support and resistance versus being in the middle of the ocean. There we go. Probability can easily but directly correlate it to probability of being profitable. So for anybody who's watching this video and you're struggling, maybe you need to practice identifying support resistance a little bit more and then execute your trades and then go through your confirmation checklist. Once the market comes to a confirm is the word, a confirmed area of support and resistance. Once again, everybody has different trading styles. That's perfectly fine. This is just what helped me train my eyes to see probability, patterns, repeats, and then I can learn, right? So right now, do I want to trade where the market is in the middle of the ocean? No, I want it to come to an area that was a strong resistance point, and let's see what happens next, right? There's a probability that the market is going to buy up here and then drop. That's fair. There's a probability that the market can buy up to this zone and drop. That's fair. There's a probability that the market can go up to this zone, retest, and continue. Retest, retest, and continue. So there's so many different probabilities when it comes to the market, but it's your job, if you can practice identifying these levels, if you can practice getting into the habit, that's a good word, the habit of letting the market come to you before you execute the trade, you're now going to put yourself in a better probable chance to make some money. All right. So that's really what support and resistance is. Practice this. See if you can find areas in the market. The only way you're going to get better is the more you practice. And I'll have another great example of what I'm talking about. We found these areas of support and resistance here. Look right here. Here's a great example of this, right? Look at the cluster of these candlesticks. Look at the clusters of these candlesticks here. Let's grab this red candlestick, for example. Right here, this one. Let me get my arrow. Let's draw this candle and let's draw it out. Or we can go to line chart. Let's go to the line chart. We can mark that off. We got a point here. And even we got a point, what? Here. Notice, see how the market's come to this level before. It's been here before. It's been there before, right? So let's just use that as an example, right? This level right here. We can even extend it to the left. And we know that price has been here before. It's been an area of resistance. It's been an area of support, resistance, support, resistance. It was support, bought off. But check out something that's super, super interesting. Remember I told you guys about the break and retest thing I did? Here's a great example. Even in the line chart is showing you what I'm talking about. The line chart went, okay, we have an area of consolidation or a cluster of candles. It broke out of that cluster. It retested the cluster. Are we truly buying? Yes, we are. Why? Because it broke, retested, and continued. Then even in this line chart, you guys might see there's a little gap here. But when you go to the candlestick, you'll see it was a wick of a candlestick. And just like that, right? What did it do? It broke, retested, and continued. And then guess what price did? Price did what? It came up to this high, sold back down to what? This level of support. Wait, didn't we see this again somewhere else in the market? Where did we see this, guys? Oh, that's right. All the way down here. All the way down here, right? See how we're starting to see how the market can get real repetitive, real fast? Check this out. Draw this across. Do you guys see what I'm talking about now? You guys are starting to see that it's really repetitive. Area of resistance broke off, retested, took off, consolidated, came back down to that zone. Look, did it again. What did it do? Broke, retested, took off. You can't make this up. What did it do? Sold. Next candle, closed above. Next candle, retested that level. What did it do? Bought again. What did it do? Come to this level, retested it, took off. And guess what, guys? You can recycle these levels as many times as you want. Remember that, once again, the market's super repetitive. It's repetitive, right? So it is perfectly fine for you as a beginner trader or as an advanced trader to repay certain price points in the market over and over and over again. It is okay to do that. Some of the best traders in the world will tell you, yes, I do that. They play the market. They study the patterns and they just look for the patterns. Look for the patterns and they build a confirmation off of those patterns. They figure out the history of the pair. They figure out how the stock moves on the technical side. What we're doing right now, ladies and gentlemen, is called technical analysis. We're doing lines and charts and graphs and stuff where now you're using technical analysis to help you out. It's where to help you out, right? So with that being said, we can literally use this markup to our advantage. Okay, Aaron, I want to be able to find a higher probable setup. What could I do? Now that I've identified an area of support and I've identified a couple areas of resistance, this allows me as the trader to find targets. It gives myself a target on where I can next execute my highest probable setup. Whether the market decides to sell off and bounce off, whether the market decides to buy and sell, whether the market decides to buy and continue, whether the market decides to sell, break this level, retest and continue selling, we don't know yet. We don't know, and that's okay. But because we've identified our beaches, our supports and resistance, now we can sit on our hands and allow for the market to come to us to allow us a higher probable setup. So that's day number 2. Day number 1, we talked about the basics of trends and how to identify them. Today, we talked about support and resistance and ways for you to practice identifying those levels and seeing what the market does. So I hope you guys enjoyed this video of day number 3. I will see you guys tomorrow for day number 4 when we get into a little more in depth of buying and selling, when to do it, and we talk about proper risk management in that as well with probable setups, etc. like that. And we will talk about on that day how to not get faked out in the market as a beginner trader. So love you guys so much. Thank you for an amazing day number 3. Day number 4 is tomorrow, which will be a Wednesday, and we'll dive into those topics. Love you guys. Have a great rest of your night. Peace.